Okay, so hello everyone, my name is Salim and welcome to the mini markets live breakdown analysis. So before we start, I just want to make sure everyone can hear me clearly and then we will go ahead with the analysis. Okay, so on the on our last live stream when we did do the analysis, I remember a few people have requested to keep the exact same lines that we've had for potential buys and sells, which our last live stream was on Thursday last week, and we have we obviously we were preparing the analysis for Friday. So I just kept the exact same levels that we've identified on our analysis on Thursday night, which is Friday early morning, and just want to keep it here for people to see first. So as we can see, we were looking for potential buys above 20.38.700, and this is how it went. And I'm gonna break down everything again. We're gonna review how the last weekly candle closed, and then we'll go from there as well. So as we can see, one of the reasons to why we were looking, so this was the Thursday daily candle closing bullish, and something that we've mentioned previously is how price was ranging and then what everything changed here. Everything was bearish, knowing that we've had rejections to the upside up until the daily candle for Thursday managed to close bullish with the rejection to the downside, and somewhat the daily seems to be closing decent bullish. Now, yes, the daily still closed within this range, but the anticipation I've had then is to see, since excuse me, since the daily formed a support on Thursday, there was a probability for price to continue bullish, respecting this daily support and respecting this daily rejection forming to the downside. So the anticipation was to see some potential buys. Now, so one of the targets that we were looking for, or I was potentially looking for, is the only reason, okay, so just to simplify this, the only reason why I was anticipating to see a potential continuation to the upside is because of this rejection happening on Thursday and because of how this daily candle closed. And obviously, as we know, if price is ranging for quite some times and price formed a support and then formed a rejection to the downside, if price is failing to continue bearish, this daily candle gave us some sort of a confirmation for a different bias, which one of the things that I was looking for is maybe was price was going to retrace to retest another level. Now, one of the levels that I was looking for is maybe a retest of this weekly resistance, but I didn't go as far as this weekly. So I mentioned a potential retest of this weekly resistance, but I didn't go as far as knowing that price was going to tap into this level. It was mainly to see a daily maybe tap into 2050 area, which is a strong key level on the high time frame. As we can see, price, the daily candle for Friday closed just within the 2050 level, and this is how buys went out. Obviously, price broke above this level. The only way people would have caught these buys is for let's say an impulse entry, because obviously this wasn't really a confirmation. This candle closed bearish on the hourly time frame, and this is a really weak candle on the hourly. That's roughly measuring around, let's say, 22 pip range, and that's really small. So as we can see, price continued bullish. This is where people could potentially have missed on these buys. Now, obviously, price tapped into a weekly resistance. Obviously, that was the high for Friday, and price tapped into this weekly resistance, then rejected, retraced and closed week bullish. Now this was just like a quick review on what's going on before we take all this off. Okay, so now we're just going to remove them, and then we're going to still do the breakdown analysis from the weekly and so forth. So if anyone have any questions regarding the Friday analysis, just feel free to comment on the live chat. So now just a quick recap on GJ, and actually obviously usually we start with GJ. Now with GJ, drop it down to the hourly, and this was our no trade zone, and as we can see, price haven't really done anything. Some people were looking for potential buys to retest this hourly resistance. As we can see, price kept ranging, and it was just terribly ranging, I'd say, because even once this candle managed to break out of this range, there was so much inconsistency in this candle formation. So as we can see, price rejected again this area, and that would have been a perfect confirmation for further sells. But the only downside with this is price started to range again within this level. Now the other side of it is the level that we've had for potential sells have been both tapped. As we can see, we've had these lines just for a further retest, or maybe like if we've had a lot of volume in the market, then price could have pushed to this previous daily resistance. But other than that, these two were our two main targets for potential buys, potential sells, I would say. So now what we're going to do is we're going to remove everything, and we're going to again review the weekly with a naked chart, and then we go from there. Just going to remove all this. So do you trade XAUUSD using DXY? No, I don't really know. I just focus mainly on just gold and GJ, but I don't really look at the XY. Only recently I've added it to my trading view just to see what I can notice, but I haven't really paid attention much to that. So now starting with GJ, and after that we're gonna do a lot of answers. So actually let's just happy new week. Ricardo, welcome to the live stream. Coyote, welcome. Fitness motivator, welcome. What do you think the price of gold will go? Now this is exactly what we're going to do shortly, but what we need to do first is look at GJ and then we'll go to gold. That's how I usually like to do it, because obviously the weekly candle for gold have just started, so we need to allow a bit of time for this weekly candle to start. And we're not really talking about an hour or anything, but just a little bit of time, maybe like a 1:30-minute candle closing. But for the meantime, what we can do is we can look for GJ, which the candle has already been open for 1 hour and 20 minutes. The news messed up my entry because I had a really lovely entry on the retest. Are you talking about GJ or gold? I'm assuming you're talking about gold, but yeah, it's I would say there was a lot of wrong timing, but yeah. So now looking at GJ, now the weekly, and this is something I've mentioned last week. So looking at the weekly closed bullish. Now the question is this a weak bullish candle or is this a decent bullish candle? Now, in my opinion, sometimes when I struggle to know whether this is a weak bullish candle on the weekly time frame or if it's just a healthy bullish candle, is if I struggle within the weekly time frame, I always drop down to the daily to see what the last few daily candles have done. So now clearly what we can see is the Thursday daily candle formed the resistance, the Friday followed that momentum respecting the daily resistance, continuing bearish. Now that tells me this is somewhat like a weekly bullish closing, bullish, and this is some sort of a rejection, because this stop wick here that we have is within this level. There has been a daily resistance formed and another daily candle closing bearish. As we can see, daily resistance formed, daily rejection to the upside, and a daily candle closing bearish respecting this daily resistance. Now, yeah, like, to be honest, Abraham, GG, that is on Friday. Yeah, like GJ was very inconsistent, and the only thing we've lacked on GJ is just volume, because the setup we've had for Friday was really good. So as we can see, the weekly closed week bullish. Now the question is, still the weekly closed bullish, but are we going to see a fill of this week to continue bullish to retest this weekly resistance? Or is this going to be a rejection for the new weekly candle to form a top wick, respect this weekly high, retrace, and start to correct some of this weekly bullish candle we've had previously to retest this previous weekly support? Now this is just visualizing the high time frame. Right, I measure the body of the candle and compare with the measurements of the wick. Yeah, that's a good way. That's how I do it as well, looking at like different things. For example, in this case, the body of the candle, that's roughly around 92 pips. The top wick, that's 138 pips. So this, to me, classes as a rejection. And when it's, for me, difficult to identify whether it is a rejection and a weak bullish candle, or if it's just a healthy bullish candle, I always refer to the daily time frame to see what the last few daily candles have formed. Now, in my opinion, this is a weak bullish candle. We could potentially see a continuation to the downside, and the only reason, or the only confirmation I'm having to see that as a weak bullish candle is because we've had, first of all, we've had the monthly resistance. So this high that was made on this weekly candle, the last weekly candle, could be the monthly candle has already formed a top wick before breaking below to continue bearish. Now, one of the confirmation to see for potential sells based on a weekly time frame is we've had the monthly resistance formed in December last year. Now, when dropping down to the weekly, that's weak bullish. Again, the other thing that you need to pay attention to is, since this weekly candle, and this is really interesting, since this weekly candle closed with a rejection to the upside, now what else do we see on the left? What I can personally see is I can see multiple rejection wicks to the upside on the weekly time frame. We have 1, 2, 3, 4 weekly candles of rejection in this area. So clearly, if we put a line here and we put where the weekly rejected, that kind of lines up with this rejection area on the weekly time frame. Now again, when you drop down to the daily time frame, what do we see on the left? This is where the daily ranged previously. So this is how you can align those analyses based on the weekly, monthly, daily, all time frames, you know. So now let's have a look at those targets on the weekly. Now, what I can see here is maybe allowing the new weekly candle to form a top wick, and that top wick could be meaning price could one more time retest its daily resistance, form a rejection on a daily time frame, knowing that we have decent volume in the market, and then price starts to break, and then that's when we can start looking for targets on a low time frame. That's just visualizing how we want the weekly candle to form. Now looking at, okay, so now to break down the chart. So the first thing we can see is the daily candle on Friday closed bearish. Now this is something that we've anticipated, and the reason why I've anticipated for a daily candle to close bearish and to see a correction is because of this bullish daily candle that was formed on Wednesday last week. So this bullish candle hasn't formed a bottom wick and broke above these highs and closed extremely bullish. Now if there was a change in the bias, so let's say there was a change in the trend, then I would say the Thursday daily candle should have continued bullish. So it didn't. For me, that's when I started to look for these retracement or a correction of this daily candle, is because once this daily candle for Wednesday closed bullish, when you drop down to the 4-hour time frame, you like the way you could anticipate that continuation to the upside is to see consolidation, a support formed on the 4-hour time frame or the hourly time frame depending on the volume, and then a continuation to the upside to retest, let's say, this daily high and then continue bullish. But what happened instead is price started to range on the 4-hour time frame, which what made me realize that there could be a potential correction of this daily candle formed on Wednesday, and we have these decent 4-hour candles as well. And then obviously that was lining up with the weekly, potentially anticipating the rejection. So that's how that basically that's how we've had these analyses. The only thing I would say Yes, the daily respected, so the Friday daily candle respected the daily resistance formed on Thursday. The daily candle on Friday broke below the daily candle formed on Thursday. The only problem we've had here is we've had a lack of volume. So we didn't really have much volume. Yeah, price broke below this 4-hour range, but then clearly you can see that inconsistency in volume and obviously in candle formations as well. So now to look for potential targets for buys. Now just to break down the chart. So the first thing we can see is the Friday closed bearish. What we like to do is put a line to where the daily low was formed on Friday and the daily high formed on Friday, and then dropping down to the 4-hour time frame. And what we can see here is we have this really messy range on the 4-hour time frame, but now we have this new range forming on the 4-hour time frame. This 4-hour candle forming a rejection to the upside. We need to identify and see if we can adjust anything. So dropping down to the hourly time frame, and this where it looks really messy. So what we're going to do here is we're going to adjust it based on different time frames. So clearly we can see this is an hourly support around 184.540. The most recent 4-hour hourly resistance, we have it at 185 level. Dropping down to the 30-minute time frame, now we have a 30-minute resistance in here. We have this range, and then we're looking on a 15-minute time frame. Again, we have a 50-minute resistance in here, and then again we have this same messy range on the low time frame. Now, in my opinion, what would be good is, since the new weekly candle is starting, the best thing to do is to have a reasonable, target. So you don't want to go for anything that's huge, just because, the weekly is just starting. So we're not really wanting to have these big targets, especially where price have been ranging like we can see now. Now, what we could do for potential buys, going back to the 4-hour time frame, we can clearly see we have this 4-hour resistance with this 4-hour week closing bullish, rejection to the upside. Dropping down to the hourly time frame, now we have an hourly resistance around 185, 140. This is a previous 1-hour support. So this is where price have consolidated previously, and then price broke below this low, formed the resistance, continued bearish, formed the new range. So I would say potential buys could potentially be above 185, 140, anticipating for a continuation to the upside. And for potential sells, now prices at the moment trading around 184.732. So ideally is to allow some sort of a range for the Asian session to form a new range for the new weekly candle. Now what we're going to do is drop down to the 4-hour time frame, and what we can see on the 4-hour time frame, we have these 4-hour lows around 184.470. Let's see if we can adjust it based on the hourly time frame. So dropping down to the hourly time frame, and clearly we can see this is a decent range in my opinion. Looking at the 5-minute time frame, 15-minute time frame, what we would do here is look for potential sells below 184.470, and this is going to be the no trade zone. And the only reason, again, why we're not looking for potential buys above this level is because the new daily candle has the new weekly candle has just started. So we need to allow for price to have a decent range to consolidate. And again, I know we do have this 30-minute resistance at this level, but the anticipation we're having is based on the 4-hour and the hourly resistance on the left as well. So this is going to be the no trade zone. Any questions so far, please just feel free to put on the live chat, and I'll be happy to respond to them. So now to look for potential buys. So since the weekly candle has literally just started, what we are anticipating again is to see a new weekly candle forming a top wick, and then forming some sort of, okay, so the way it's going to look like a weekly candle forming a top wick. It looks like the weekly candle has been bullish, but what we need to do is to see where price could potentially tap into and starts to retrace or potentially reject. Now the first thing we can see here is we have this daily resistance formed on Thursday around 185.720, dropping down to the 4-hour time frame, and this is where is a messy range, and this is where it makes it really difficult to look for potential buys, because for example, to see price continuing bullish, we need to see volume coming in. Okay, so we need to see strong bullish hourly 4-hour candles closing within this range to continue bullish. So what we need to do is we need to wait for that volume. Now, do we usually see that volume on Monday or Tuesday? Personally, I haven't really noticed that volume coming in like this, but never say never. We really don't know how price is going to form. We're just anticipating, we're just predicting where price is going to go next. 100% spawn. Yeah, thank you, Abraham. Did you, brother, anticipate last move on GJ? The sells? Yes, I did, based on a daily. It's already been explained. I could always go over it after I do the analysis, just because I think some people's already waiting for gold as well. So what we're going to do, Ziad, is carry on with GJ's analysis. I can always go back to your questions once I finish those breakdowns, just so we're not holding people for longer. That's all. Just in case if someone wants to just get the analyses and leave, then that's completely fine. We just want to keep it more you know, for everyone. But yeah, so for buys, the only issue we have here, let's have a look quickly. Yes, okay, so the only problem we have for buys is this 4-hour range. So this becomes difficult to see strong targets to be tapped, for example. So that's why, so now this is another thing. Okay, so this is another confirmation to give you the reason to why you can start waiting for price to form a topic for the weekly candle to start to retrace. And that's like for you to take a certain bias, you need to have multiple confirmations. So one of the confirmations for me to say, okay, the weekly can close the week bullish, we have this range on the 4-hour time frame. Now what we're going to do is we're going to identify what was happening within this range. Now dropping down to, so we have this 4-hour resistance, we have multiple rejections. Dropping down to the hourly time frame, and what we can see here is we have this hourly resistance around 185.530. We have this hourly rejection. This shouldn't be much of a problem, but this is something it's worth keeping an eye. Let's say if you were looking for buys, once price tap into these levels or this level around 185.300, knowing we've had some sort of a rejection to the upside on the hourly time frame, maybe pay attention to see how price is forming. Maybe if price starts to retrace, then that's when you really need to manage your risk. Because if price, for example, let's say we've had these rejections on the left and then you've bought once price was breaking above. Can you see how price starts to retrace and reject? So you don't want to take this whole loss, you want to manage risk. So if price rejected these times, it could be another rejection again, and that's why we need to pay attention to the left hand side. So we have, let's say, this hourly resistance, looking at the 5-minute time frame, and this is where you want to skip those low time frames, because it becomes very inconsistent in terms of finding a decent target, and that's why we need to refer to the high time frame. So I would say the first target for buys could potentially be 185.530, targeting this hourly resistance. That kind of makes sense really, because we trade in the 4-hour range and you don't want to look for anything massive. If you want to look for something big, then maybe wait for price to break above this 4-hour resistance, and then you can look for much bigger target. The second target for buys, now let's go back again to the weekly. Okay, so if we were looking for, let's say the weekly was going to continue bullish, we have this previous weekly high. Dropping down to the daily, this was a daily rejection formed on Thursday. But before this daily rejection formed, we've had a daily resistance around 185.730. This is a really small range. Dropping down to the 4-hour time frame, we have a 4-hour resistance. Dropping down to the hourly time frame, we have now this really messy range on the hourly time frame. Now I would say, and I know this is a really small target, I know this is a really small target, and probably some people might not agree with this. I would have a second target at 185.730, knowing it lines up with the 4-hour resistance and the daily resistance. But if there were signs of decent volume in the market, then you could have your target to this 1-hour resistance around 185.860. So this is something that it's worth paying attention to. Yeah, second target around 185.860. Paying attention to the 4-hour resistance around 185.720, 730. So now to look for potential sells, and going back to the daily, actually going back to the weekly or even the monthly. So since the monthly, it's still extremely bullish. It's really hard to tell whether the monthly is going to continue bullish to retest this monthly resistance. But what we need to do is drop down to the weekly time frame. Now, dropping down to the weekly time frame, and what do we see here is we see this weekly closing bullish. Do we see anything left? Like on the left, if anyone can notice anything on the left. Okay, so I'm just going to give like maybe 5 seconds on weekly. Okay, so on the left, apart from where this weekly candle started here around 183.850, we have these weekly rejections. Now, what do we see about these weekly rejections is, where is it? We have two weekly rejections formed previously around 183.790. This is where the weekly candle started. And again, we have these two weekly rejections on the left. So this becomes an area of an interest. Now, this is something that we can just pay attention to. Zooming in and dropping down to the daily time frame. And what do we see now? We can adjust our levels more. Now we have this previous daily resistance around 184.050. Dropping down to the 4-hour time frame. Now we have this previous 4-hour resistance around 184.050 again, and this is where price broke above, and this is also where the daily candle was extremely bullish on Wednesday last week, excuse me, and that's where we're looking to see that correction, or a full correction basically. But yeah, dropping down to the hourly time frame, we have an hourly support. To be honest, sells look much more cleaner than buys, in my opinion. Knowing that the weekly closed bullish doesn't really mean that we're going to see that continuation to the upside. We're paying attention to different time frames, especially the daily and the 4-hour time frame. So I would say, knowing that we have this decent hourly 4-hour candle closing bullish, we can have the first target for sells at 184.050, targeting this previous 4-hour resistance. Paying attention, while price breaking out of this range, we need to pay attention to these wicks on the left. Now, there could be a possibility for price to reject this area, but if the daily candle for Monday forming a top wick, and then once it breaks below the Friday daily low, there is a higher probability for price to continue bearish and pretty much really ignores these wicks on the left. So the reason why potentially the price could not have much of a problem with this rejections or these wicks on the 4-hour time frame is because price will be breaking below the daily low formed on Friday. Now, as mentioned, the first target for sells is at 184.050, targeting this previous daily resistance, which is also the previous 4-hour resistance. The second target for sells, now going back to the weekly again, let's see if we can identify anything. Pretty much on a monthly, not really, apart from this monthly support here, previous monthly support around 182.200, meaning if we've had a weekly, yeah, I mean, too early to say, I would say. Okay, so I'm anticipating to see this weekly candle, the new weekly candle, to close bearish and then forming resistance, and then that's when we can start to see that continuation to the downside to predict price to tap into this previous weekly support. Meaning, if price is trading within this weekly support, that means the monthly is starting to form a huge rejection to the upside, and we can almost start to look for sells based on the monthly time frame. I really hope this makes sense for some people. I hope this is really clear for people as well. But again, if you have any questions, feel free to ask. Now, to look for second target for sells, the first thing we can identify here, let's just adjust this here, we have this daily support formed on Wednesday around 183.550, dropping down to the 4-hour time frame. Now, this becomes a really messy range. Dropping down to the hourly time frame, we have this 1-hour support. We have this hourly support in here, but with volume, we're anticipating for that continuation to the downside. And then on the 30-minute time frame, not really, like, it does look really messy on a lower time frame, I'm not gonna lie. And I think that's why we should pay attention to the high time frame for now. And again, It's only start of the week. We need to allow, you know, market to give us that direction based on how the Monday forms. Because just imagine if the Monday daily candle starts to range within this level. Now you have no confirmations, and if you have no confirmation, that means there is no volume, and it's just a waiting game, really. So I would say the second target for sales could potentially be 183.560, targeting the daily support formed on Wednesday last week. So if we do have any questions regarding GJ's analysis, and please let us know first before we go ahead with XAUUSD. I'm just going to wait to see if anyone on the chat, if they have any questions regarding GJ before we go ahead with XAUUSD. Okay, so we have Nemat saying, I think our no trade zone can be above 186.360 on the 4-hour time frame because there are multiple rejection wicks. Even though it is a high range, it feels it is safer. Okay, let's have a look. So you're talking about 186.360. So I'm just gonna put a line to where you've just mentioned it. 186. Are you sure about 186.360, or do you mean 185.360? I'm assuming you mean 185.360 maybe. I'm just gonna wait. I do think that you mean 185. Because 186 is much higher. Okay, so let's say, yeah, 185.360, yeah. So, yes, I would say it is safer, but, yes, you do have this 4-hour rejection. The only problem is, your no trade zone is going to be much larger, but then if you were looking for potential buys above 185.360, your target for buys, where is it going to be? The problem with that is, you have a 14 pip range before you tap into the previous 4-hour support on the left, and then on the hourly you have this hourly range in here, and then so like your no trade zone is going to be much larger. It's really hard to explain sometimes, or like, you know, to like, let's say you was looking for buys above 185.360, you have this hourly support, hourly resistance in here. This is roughly around 16 pip range. So your targets. So if you're looking for potential buys above 185.360, then you're gonna be forced to move higher to looking for potential buys above 185.530, because that's where it looks much cleaner. But then your no trade zone is going to become 106 pip range. That's the only problem I could see with that. Now, if you think this is something that's reasonable for you, then that's completely fine. That's not a problem at all. The way I did line it up is, if price ranged previously within this level, and I've paid attention to this hourly rejection, which is also the 4-hour rejection, if price is going to close above this 4-hour consolidation area and the hourly area, then that means price is going back into this range. So if price is going back into this range, then that means price is rejecting the downside. Therefore, we can start to look for buys above this level. That's how I am like viewing it. But if you think it's safer for you to wait above 185.360, then that's completely fine. It's just that the no trade zone would be much bigger, I would say. But what you could do is, you could have your analysis, just line these up, and then just see by the end of the session how that would look like. If price, let's say, respected this area, has price traded below this area, has price broke above 185, 140 and then rejected this area and then starts to retrace, that's the kind of things that you want to keep an eye on. Do we have any questions regarding the GJ analysis before we head up with XAUUSD? I'm guessing we probably don't have any questions, so I'm just gonna go straight ahead with XAUUSD. If you do any questions, if we do have any questions, I will be happy to answer them. That's not a problem at all. So now going back to, let's just adjust this here. Okay, so now going back to gold. Now let's have a look at the monthly. So the monthly has done a huge retracement and it looks like it's almost, you know, trying to go bullish again, but there is no confirmation yet. Yeah, the question, what about that question, bro? What's the question again? Let's go back on the chart. Oh, so did you, brother, anticipate last move on JJ, the sell? Yeah, so we did actually anticipate the sells on JJ from Friday. The confirmation was since the Wednesday daily candle closed bullish, and that was a huge candle. Like when you compare this daily candle to these last few daily candles, this daily candle came out of nowhere with decent volume, hasn't formed a bottom wick, all of a sudden broke above the high and just was a strong bullish momentum. So the anticipation was to see how, you know, for example, how we can see the week ending. So the anticipation was since the Thursday daily candle closed bearish and since price was ranging on a 4-hour time frame, the anticipation for sells was to see a correction of this daily candle. Now as we can see, price retraced, and yes, there were sells, but the only problem is it wasn't, you know, straightforward because there was a lack of volume. And the way to identify the lack of volume is when you drop down to the hourly. You can clearly see how price was ranging on the hourly time frame on Friday. So yes, like the sell idea was there, and the anticipation to see that weak bullish candle closing with the rejection to the upside was there as well. And also we've paid attention, we've mentioned how we did pay attention to this previous weekly rejection wicks on the left, and now this is lining up actually, because where price rejected previously, that's the exact same level where this weekly rejection happened as well. I hope that did answer the question. So now going back on gold again. So the monthly is still bearish. The weekly candle closed weak bullish. Now this is really interesting, and it almost looks like the weekly time frames forming a range, because when you look at this three weekly candles, so the last 3 weekly candles closed some sort of like small body candles. And now what we're going to do here is we can clearly see there was a rejection formed on a weekly time frame on the last weekly candle, and that's lining up with this previous weekly resistance on the left, which is another confirmation to maybe see a continuation to the upside. But again, this rejection only happened on Friday, I believe. Thursday formed, and then obviously Friday closed bullish. So now, we have a weekly candle closing weak bullish, forming weak weekly support around 2043,700, forming a rejection to the downside, dropping down to the daily candle for Friday. And this is something we've anticipated on last week. Is on Friday we were anticipating to see that continuation to the upside on the daily, knowing that the Thursday daily candle closed bullish, forming a rejection to the downside. So since price was consolidating on the daily time frame, it didn't really make sense to see the daily candle closing bullish with a rejection to the downside. Now since the daily candle on Thursday gave us a different story, which meaning the daily closed bullish with a rejection to the downside, even knowing that we've had multiple rejections on a daily time frame to the upside, there could have been a change in in the trend. But that doesn't mean it's a long-term trend. Let's say it doesn't mean we're going to see that continuation to the upside. It simply means there was a possibility for price to retest a certain level. Now those levels could have been a 2050 area, which we have mentioned, and we've had that lined up already with our targets for buys. And as we can see, the daily candle for Friday closed just below the 2050, and obviously there was a continuation to the upside, forming a same rejection to where the daily candle formed on the 5th of January 2024. Now dropping down to the 4 hour. Now we're going to start breaking down the analysis. So a quick anticipation on the weekly. So since the weekly candle closing bullish, are we going to see that continuation to the upside? The first problem we have is we have this weekly resistance. The only way we can see that continuation to the upside is if we see price forming another range and then continuing bullish to fill this wicks. Because if you're targeting price this weekly resistance and to see that continuation to the upside, we have 2 daily candles rejecting this area. So in order to see, let's say a change in the trend, to see those buys, maybe we need to wait for price to break and close above 2060, knowing that price will be breaking above the weekly resistance to continue bullish. But other than that, I'm still looking for sells, because that's still a weak bullish candle. But again, I'd say we need at least 1 daily candle. Maybe the Monday daily candle would give us some sort of a new range for the new weekly candle to anticipate where price could go next. Again, that's the only problem. It's just how this daily candle closed on Friday. But again, still closed above these multiple rejections and consolidations on a daily time frame. Now, so what we like to do first is put a line to where the previous daily high was formed on Friday around 2062.800. The previous daily low formed around 2030, dropping down to the 4 hour time frame. And what we can see here is price breaking out of this 4 hour range and forming a new range. So what we can see here is we have the most recent 4 hour support around 2047. The most recent 4 hour resistance is at 2055.600. Dropping down to the hourly time frame and zooming in, and now we have a new range. So now what we have is again an hourly support and an hourly resistance, but we have this previous 1 hour support, so we need to have a decent no trade zone. So what we're going to do is measure this level. That's roughly around 31 pip range, and for that reason we're going to adjust the level to 2043.800 based on this hourly support. For a resistance, I'm going to keep it as this, but let's have a look at different time frames. So we have this previous 30-minute resistance. Let's have a look on 50-minute time frame. 15-minute time frame, what we can see is we have this previous 15-minute support formed around 2051.800, and then on the 30-minute time frame, let's have a look on the hourly. Looks a bit, I would say, just to be on the safe side, is to wait for price to close above 2053.800 if you don't have any okay, so let's have a look on different time frames. Coming into a new range here. Okay, so since the new weekly candle starting, we're not really anticipating for big moves. Obviously, the start of the weekly candle could be just ranging or could be just forming a new range for the new weekly candle. So maybe what we could do is potential buys above this previous 15-minute support, allowing this range for price to consolidate. So potential buys above 2051 or 2052, because then at least we have some sort of a closer target for potential buys. Potential says, and to be honest, on the hourly, it doesn't really it doesn't look good at all. Even on a 4 hour time frame, I'm really hesitating on this, to be honest. 2055, then again, that's going to be a big range. And then the only problem is if you were looking for buys above this level is you have this hourly resistance, so you might as well push it to this hourly resistance. And then we're looking on a 30-minute time frame, we have this 30-minute range. And that's, to be honest, the only reason I would say why I'm looking to look for buys above this level is because the new weekly candle is starting and you don't really want to allow a big range. It's really hard to tell where the price will react of these levels. But obviously something that we can pay attention to. Samolo 2049 1 hour time frame. Let's have a look. Can't really see anything on the hourly here. Maybe we do have different charts. But what we could do is potential buys above 2052 100. Potential sells now is to look for sells below 2043 800. Let's have a look on Forex. That lines up with the 30-minute time frame, and we do have this 15-minute support, but that's really not much of a concern, knowing that we have a decent support on the 30-minute and the hourly time frame. So this is going to be the no trade zone. Not really 100% happy with, you know, the potential buy area, simply because of how, you know, price looks on different time frames, especially on the 30-minute time frame. It looks really, really messy. Based something that we're just going to have to go along with. But yeah, especially knowing we've had this rejection on Friday. But anyways, so potential buys above 2052 200, potential sells below 2043 700, and the no trade zone is already much large, so we don't really want to compromise too much on these targets. That's roughly around 84 pip range as a no trade zone. And now to look for potential buys. Now going back to the weekly, and the first thing we can see is a weekly closed week bullish, forming a rejection to the downside, retested the weekly resistance formed previously. The question is, are we going to see another retest of this weekly resistance? Now this could be a possibility. So what we're going to do is we're going to put a line to where this weekly resistance, which is also the weekly high formed last week. Dropping down to the daily time frame, we have a daily rejection formed on Friday, also the daily rejection formed on the 5th of January 2024, which I believe was that was on Friday last week as well. Interesting, is the exact same days which forming the exact same rejections. I'm pretty sure that's the same. Yeah, really interesting. So see how the Friday daily candle rejected the same level, and that's how the Friday daily candle this week formed a same rejection as well. Anyways, so dropping down to the 4-hour time frame, now what we can see, we have this previous 4-hour support formed on the left around 2058 700. Again, we have another 4-hour resistance in here. We're gonna pay attention to this, but let's have a look on the hourly time frame. Now on the hourly time frame, we have an hourly resistance around 2056 500. Dropping down to the 30-minute time frame, we have this 30-minute resistance around 2058 100. 15-minute time frame is just a really messy range. I would say the first target for buys, we could potentially look at this 30-minute resistance around 2058, because that lines up with, yeah, with the 30-minute resistance. Again, our only issue is we have this 30-minute resistance around 2055, and that's where it becomes really difficult to decide whether you want to have that as your first target or not, knowing that if you were looking for example, for buys above this 4-hour resistance, now you're risking some potential reward within this level, because if you were looking for 2053 or let's say 2054, now you have a 20 pip range. It's really not that big. But what you could do is always pay attention to how price react once price tap into 2056, for example, and then just manage risk accordingly. So I'd say the first target is 2058 100. The second target for buys, now going back to the weekly, and we have identified the weekly resistance around 2062 800, let's say 2063. Dropping down to the daily time frame, we have this daily rejection formed on Friday. Looking within the 4-hour time frame, we have this previous 4-hour support. We do have this 4-hour resistance, but I'm really hesitating on big targets or buys, and the only reason why I am hesitating we have 2 rejections on the 4-hour time frame. We have 2 rejections on a daily. We have a resistance on here, and we have the weekly rejection as well. So buys are gonna be really difficult. In my opinion, they're gonna be really difficult, unless if waiting for price to break above 2064, I'd say, then maybe start to have some decent levels above here. But other than that, it's tricky. So looking for potential sells again. So now dropping down to going back to the weekly. The question is there a probability for price to trade below this weekly rejection? On a monthly time frame is really hard again to say anything, because obviously the monthly is still bearish. That's when you need to start to look more of a low time frame rather than looking at the monthly and weekly. Only pay attention to how the weekly rejected. Now dropping down to the daily time frame, and the first thing we can see is we have this daily support formed all the way around 26,800. Within this level, we've had some sort of a range or a rejection within these 2 daily candles. Let's have a look on 4-hour time frame. Now we're dropping down to the 4-hour time frame, and this is where price formed a 4-hour range. We can clearly see we have this previous 4-hour support around 20,33,700. I think sells are going to be much better, but what we can do is adjust it to this previous 4-hour resistance around 20,36,300. Let's see what we can identify within these 3 rejections on the 4-hour time frame. You can see how price formed the resistance, formed the rejection, pullback, rejection, pullback, rejection, pullback, and then finally price. This is actually a really good confirmation for buys back then. Obviously, I'm not sure if anyone paid attention to this one. It's not something, I don't think I've mentioned anything. I don't really remember, but you can see how this 4-hour candle closed above this 4-hour resistance area. So once this 4-hour candle managed to do what multiple 4-hour candles didn't, you can see how buys became really, really easy for continuation to the upside. But anyways, dropping down to the hourly time frame. Now on the hourly, and we need to compromise on those levels, we have an hourly support around 2038. Dropping down to the 30-minute time frame, we have now a 30-minute support, but then we have this 30-minute range. Now the question is, what is the probability for price to react to this level? Because that's a range on the 30-minute time frame, and that's a minor range really, because yeah, I mean, I would say the first target for sells could be 2038, targeting this hourly support, which means, retesting one of these 4-hour rejection level. The second target for sells, now going back to the daily, again, we're going to put a line to where the daily support formed around 26,800. Dropping down to the 4-hour time frame, zooming in, and we have a 4-hour recent support around 20,33,700. Dropping down to the hourly time frame, this is again where it becomes really messy on low time frame. So I would say, again, stick to the high time frame, looking at the second target for sells at 20,33,700, targeting this previous 4-hour support. If we do have any questions regarding gold's analysis, just go ahead and put them up on the chat and I'll be happy to answer them. But yeah, to be honest, like so far, I'm not sure what you guys think, but gold, it's really hard to tell where price is going to go ahead, like where it's going to go next. Yes, we do have some sort of a confirmation based on a high time frame, but nothing really. There's nothing that lines up, because what we have is we have this Friday daily candle breaking and closing out of this daily range, but then this daily candle in the same time formed the rejection. This rejection formed on Friday is the exact same rejection level formed on Friday previous to that. And then again, let's say, okay, so we're going to look for, that continuation to the upside. What do we see on a weekly? The weekly closed the week bullish. The weekly tapped into this weekly resistance. What would be good actually is if we've had the weekly candle closing decent bullish. Doesn't have to be above this weekly resistance, knowing that we didn't expect that much of a volume to happen on Friday. Maybe if we had candle closing above 2050 or 2055, then that would have been a healthy weekly candle closing bullish, and the anticipation is to see the new weekly candle retracing, forming a bottom wick before the continuation to the upside. So that we have, why are we targeting support and not resistance? Why are we targeting? So which one are you talking? Are you talking about gold? And are you talking about buys for targeting support and not resistance? I'm assuming that you're talking about gold. So you're talking about why we're not targeting this 4-hour resistance or maybe an hourly resistance instead. The reason why is because I'm a little bit hesitant on how buys are going to play out. Because when you look at the 4-hour time frame, when you look for so when you look for buys, the only thing that I'm not looking at this 4-hour resistance, like the weekly is only just started, and the problem we have here is you have 2 4-hour candles rejecting that the area. So what would make you comfortable? And I mean, to be honest, we were already targeting this rejection area, but this 4-hour resistance, yes, you can have it as a target, but you want to have something that's more reasonable. Yes, it would look nice to have this 4-hour resistance as a target for potential buys, but look at how these 4-hour candles rejected that area, and then look at how the daily candles formed the rejection to the upside, and then look at how we have a weekly resistance and then a weekly rejection respecting this weekly resistance. So that's why I'm looking at it. Maybe if it, let's say if this was like, let's say we've had Monday, Tuesdays already, and maybe I would start to consider different things, knowing that the weekly has already formed, let's say a bottom wick or a top wick. It has formed some sort of a new range for the new weekly candle. Then you can anticipate it better. But so far for buys, it's really hard to have that confidence in having those levels to be tapped. But again, never say never. Price might tap into this area. It's just something that you need to pay attention to. So we have, please, second anticipated target for gold again. Second anticipated target for gold again. Oh, so do you want me to go over that one again? So okay, so the idea was to see a weekly retest. So basically the new weekly candle to retrace, formed a top wick, rejected the same area. So the idea was to see this weekly resistance to be tapped, and based on a low time frame, that would look like price tapping into this previous 4-hour support. So the reason why I wasn't paying attention to this one of this 4-hour resistance is because, in my opinion, with these rejections, what are these rejections more lining up with? They are lining up with this previous 4-hour support, and that's where price, failed to continue bearish. And obviously that's the target I've seen it as for buys. Yes, I'm talking about gold on sells. I'm talking about gold for sells. So you're talking about gold for sells. Let's go back. So your question was, why are we targeting support and not resistance? I mean, the reason why I'm targeting support is, I mean, can you see any resistance on the left that would make sense? Or maybe you mean a 30-minute time frame. So you mean this one? Ziad? The reason why I'm not targeting this 30-minute resistance is because this range was short-lived. It didn't really last for long, and yeah, to be honest, because if we have a decent target on the hourly time frame, and then you have this as a 4-hour range area, I mean, this looks much more easy to target, I would say. But you can still pay attention. If you want to have your first target for sales at 2040, and that's completely fine. But in my opinion, this range was short-lived. But yeah, And for second target for sells, this was like, let's say, the nearest level to a level of support, for example, which was a 4-hour support, which lined up with this range. And it looked messy on the hourly time frame. So if you do think there is another target that you think is reasonable, feel free to share it with us and we'll be able to discuss it further. Many thanks, Salim. You're welcome, Nimat. But yeah, like Nimat, the thing is, you know, where price is forming at the moment with gold, it's really hard to trade. You know, it's in my opinion, price is just forming a range. It's one of them days where you just want to call it off a little bit. You want to just wait for decent confirmations, because the way I see it is, and that's actually true, you know, candles tell you a story, you know, exactly like how Raja mentions. You know, the candle tells you a story. The way the candle forms is telling you something. If this Friday candle closed weak bullish and formed a huge rejection to the upside, and then the Friday daily candle did the exact same thing, that tells you something, that price is not like in a certain area. Now, what happened within this weekly candle? The daily candle. This is where a weekly resistance was formed back. The last weekly candle formed in December 2023. And then obviously what did this weekly candle do is this weekly candle formed a weak support, retested that weekly resistance, which where the daily candle for Friday formed the rejection. So if price is rejecting a certain area, in my opinion, there's a reason why it's rejecting. You know, maybe there is, you know, some fundamental news coming up. Maybe it's to do with interest rates. Because the thing is, this was NFP candle. This daily candle, that was the NFP. So if this candle managed to close, you know, doji bullish, forming huge rejections to the downside and the upside, and then CPI didn't really do much apart from, you know, creating a support and a rejecting the downside, and then PPI on Friday closed bullish. Yeah, for gold, it is better to be patient, especially on the buys, my humble opinion. 100% I agree. It's best to, and again, the one thing we have to remember is, you know, we are anticipating, you know, like prices ranging on a low time frame. So if price is ranging on a low time frame, you're looking at the 4-hour time frame, you're looking at the daily, you're looking at the weekly, and if you're looking at the weekly or the daily, you know, you're looking at a high time frame. And if we are looking at the high time frame, those time frames to form, they need a lot of time, because you're looking at the, let's say for example, you know, if you're looking, let's say if we had clean traffic on the hourly time frame or a 4-hour, or just, you know, nice price action where price didn't consolidate previously, like this 4-hour range formed previously, it would be easy to anticipate the daily or the weekly. But because of price ranging like that, you need to wait for those high time frame confirmation. Do we have any questions regarding the analysis? To be honest, like usually on Monday, I'd rather just wait to see what the Monday daily candle does. What I like to do on these kind of sessions like today is good to see where price, you know, have closed on Friday, for example, how the weekly candle closed, how the daily candle closed on Friday. Look, identify a rejection area. Now we clearly see these two daily rejections, those lining up with the weekly resistance. Starts to tell you something, really, you know. But since the weekly candle closed weak bullish, forming, you know, rejecting the weekly resistance, this area, which also price could potentially be forming a much stronger resistance before that continuation to the downside. So maybe the reason why price is ranging now is to form a decent resistance before the huge pullback on high time frame. So that could be one of the reasons, Otherwise, it'd be just so easy to just, anticipate where price is going to go next. It's just a waiting game, I would say. But for GJ, like the high time frame looks much cleaner, in my opinion. The way the weekly candle closed with rejection to the upside, the way the daily closed bearish, yes, it closed bearish. Yes, our anticipation was to see that full retracement, a full correction from the Wednesday. But if the Friday daily candle didn't do that volume, then potentially Monday could do it. You never know. If it didn't do it on Monday and the Monday daily candle pulled back, formed the top wick, that's a bonus for us, because personally I'm looking for sells. I'm waiting for that weekly candle to form a top wick, at the same time paying attention to how price reacts to this level. And if I'm looking for sells, how far am I comfortable to stick with sells? Like, let's say, how far am I comfortable for price to go to for me to still have that sell bias? Now let's have a look. So for me, if price trade below this daily resistance, I'm still looking for sells based on the weekly time frame. If price on the 4-hour time frame or the hourly time frame, on the 4-hour time frame or the daily time frame, if candle closed above this daily resistance, then that's when I'm going to switch it and I'm going to start to look at different things. Because if price is breaking above this daily resistance, it doesn't really make sense, because then it looked like a daily formed a low, didn't retest this area, and then potentially continue bullish. But so far, I'm not really going to confuse you guys. I'm still looking for sells based on the high time frame. Things out. So we have, what would be your stop loss level of you sell? Are you talking about gold or GJ? Just to be a bit more specific. Let's say, okay, so let's look at GJ for example. So looking for sells. The stop level would be, so if you've had a candle closing, if you was looking for, like, waiting for confirmation, so you're not taking an impulse entry. If you was looking for sells, and let's say you were looking for a confirmation based on the 30-minute time frame or the hourly time frame, ideally is wait for the hourly candle to close out of this range. So let's say GJ, yeah. So let's say price candle closed below 184.470. The hourly candle that closed below this 184.470, wherever the high was formed, let's say the high of that candle was formed around 184.690 or 184.700, then that could potentially be your stop loss. Just 1 second, sorry. Yeah, so like your stop loss could potentially be within this the hourly candle that closed out of this range. And let's say you're not comfortable with a stop loss being too large, that's around 23 pip range. If you're not really that happy with that stop loss, maybe what you could do is wait for the new hourly candle or the new 30-minute candle to form a top wick, and then use, for example, the hourly candle closed around 184.700, and then the new hourly candle, sorry, I apologize. Let's say the hourly confirmation that you've had, closing below 184.470, forming that top wick around 184.700. Now, you could have your stop loss around that hourly candle here, knowing that price will continue bearish. If you don't feel as comfortable for that hourly candle to, let's say, to have your stop loss around 23 pip range, then maybe wait for the new 30-minute candle or the hourly candle to form a top wick, because that top wick should respect the previous hourly high. That top wick maybe could be as far as 184.590. Now, as the new 30-minute candle form a top wick, and as it starts to break it's on low, or let's say, starts to flip bearish or breaking its own low, then that's when you're going to use that stop loss above the current 30-minute high, anticipating for price to continue bearish. And then obviously you are reducing on, your risk that way. You're not using a larger stop. That's the way I would do it. I hope this did answer the question. I do apologize if it's a lengthy answer. Sometimes it's really hard to give a clear explanation without having that confirmation happening within the chart, for example. Actually, that could be a good explanation. So let's say he was looking for buys above 184.790, for example. And this is your hourly candle closing bullish, giving you that confirmation for the continuation to the upside. Now, what you could do, if you don't feel as comfortable putting your stop loss around 184.670, which is 21 pip range, what you could have done is wait for this hourly candle. Now, once it breaks above this high, open your trade, and then use your stop loss around 184.780, and that will reduce in your risk basically. Basically, is to use the high of the confirmation candle to be stop loss. Yeah, you could do. It all depends on like how big are the candles. It all depends on how big is the range, all depends on the volume time, depends on how comfortable you are. If something didn't work to plan, then it doesn't mean it's not like a right analysis. Maybe it could be price not having that decent volume. Just like, for example, on Friday we were looking for sells for price to break out of this range, and then as price broke below this range, price got into a new range. And as we can see here, that doesn't mean our analysis was incorrect. That means the move just didn't happen swiftly, because the confirmation was all there. We've had the daily resistance formed on Thursday. We've had the daily candle on Friday forming a top wick, failing to retest its daily resistance. And as a candle broke up below this level, it made sense for price to continue bearish. Now, the only issue was there wasn't enough volume. You've had clean candle on the left on a daily to mirror, but there just wasn't no volume. So it's completely fine. So you might see, that candle to be fully corrected later on the week. You never know. But yeah, I hope that did answer your question. Do we have any questions? So probably we have about 20 minutes before we end the stream, so it'd be good to have some interaction with you guys. Yeah, you're welcome anytime. Any questions, just feel free to ask. Many thanks for today's analysis. Guess today could be a wait and see day. Yeah, 100%, Nimat. In a way, it gives you a rest from just continuously, keep an eye on the chart or something. You might have, some other things you want to do. So it's good to have that little breather, because, constantly keep it, personally, I think trading is difficult when you do it on a daily basis, because you're constantly thinking, you're constantly, waiting for that move to happen. And I think it's healthy to know that price range sometimes, because it gives you that rest. It gives you it allows you to have a bit of a breather, to have a look on, okay, for example, now price is ranging. I start to look at different time frames. I start to look on a monthly. I start to look on why price is not continuing bullish. Like for me personally, I think it would be good to see a pullback on a high time frame, because we've had price breaking above this major monthly resistance. And also, that's not only a monthly resistance area, this is a huge rejection area, and those areas have been rejected during fundamental times. Like for example, this monthly rejection happened back in August 2020 during the pandemic. You've had this rejection happening in March 2022, and that was during the Russia-Ukraine conflict. And again, price from the huge rejection to the upside, retraced, went back again bearish, and then we've seen another pullback again, trading above this level. Only in December, that's where price formed a new high, all-time high. And usually what's good to see is once price form a new high, and trust me, it's really good to see that new high formed. Is good to see that pullback, because now what we did is we created history. We created a new level where you could potentially look for targets, because as a market analyst, as let's say doing breakdown analysis and everything, once price break above a certain area, you have literally nothing to look at on the left, literally nothing, because it's new price. The only way you could anticipate is start to look for let's say 2030, 2040, 2050, 2060, 2075, these kind of levels. You have no real market structure to have it as a level to look on the left. They literally have no recent price action on the left. But yeah, your analysis is spot on always. Thank you, Coyote. I appreciate the feedback. And I cannot emphasize enough on how important it is to do these daily analysis. Genuinely, they are really, really helpful. Doing them on a daily basis and not removing a single line, it just really allows you to understand yourself. Because I've been doing this since 2020, and every single night, obviously 5 days a week, every single night when I'm opening my trading view and I start to do the breakdown analysis, I'm looking at my previous analysis and think, oh, interesting, this is how I was thinking, this is where I was thinking price is going to, and this is what happened. So if my price was literally, let's say I've had small targets and price broke way above these targets, then maybe I need to start to adjust myself, because those levels are getting smoked on a low time frame. So it would make sense to adjust myself and start to look on the left. Maybe price is not actually paying as much attention on the hourly, because we have decent ranges on a 4-hour time frame. So yeah. By the way, your background tunes is kind of soothing. Oh, okay, yeah. To be honest, it's I can't really hear it myself, otherwise it'll echo with the mic. Let me just yeah, it's to be honest, it's just YouTube music. It's just a playlist that I've just connected together. I just didn't want anything that's like a rock and roll or anything, I wanted something that's more relaxing. I mean, for people in the US, probably, it's evening time. Some people might be just finishing their 9-to-5 job, just getting home. You don't want to get music hammered on your head. Also, especially when I'm talking, you don't want something that's out voicing the speaker. So having that kind of music, it keeps it more fun, I'd say. Like, it's not loud, it's not irritating. But yeah, it's a playlist I created into like just one track. So Molo, thanks, you're welcome anytime. If you do have any questions, just go ahead and let us know. Now, Dino, okay, so I'm just gonna mention something on gold. Now, since we've had weekly resistance formed at the beginning of December last year, and then a weekly resistance formed at the end of December last year, which means that, you know, at the beginning of the monthly candle and at the end of the monthly candle, a resistance has been formed. We've had within that monthly candle, which is December, we've had a huge rejection to the upside. Now, all of these rejections, I'm gonna be paying attention to, you know, especially how the last weekly candle closed. Since this weekly candle closed with a rejection to the upside, now this becomes a consolidation area on the high time frame, because the wicks are a consolidation areas. For example, the way I'm looking at it is maybe wait for a much stronger confirmation on a high time frame to anticipate further sells. Now, the only issue or the only thing that we need to pay attention to on the weekly time frame is this weekly rejection. That's the only thing that could be problematic for price to continue bearish. Other than that, on the daily, we have this daily range, and I'd say below 2026 or even 2030, for example, we could easily see price breaking below. And look how good that is below 2060 16. You have a huge range on the daily time frame. Now, the way I look at it is, if the daily candle for Thursday formed a rejection to the downside, where was that rejection formed? 2013 300. Now, below that rejection, what do we see on the left? We have this huge daily candle closing bullish. Now, that's a volume candle. Now, this is how I look at it. This will become the piece of the cake, and this is the candle that you're wanting to break down once price break below this area. So this becomes an area of interest. This is where price is going to smoothly break below, I'd say. So now let's have a look on the 4-hour time frame. On the 4-hour time frame, it's even better. Now, just before we look at this first, okay, I'm gonna put a line to where this daily candle started. So I'm not gonna look at this range here, because price has already ranged within this level of this body candle, you know, between 2013 to 2033. This is where the daily candle or daily time frame ranged, yeah. But then this is where the daily candle started, which was formed on the 13th of December 2023. Now, when you drop down to on the 4-hour time frame, what do we see? We have this strong 4-hour candle closing bullish. Again, this is the piece of the cake, in my opinion. So once price break below the daily low that was formed on Thursday, which means breaking below the previous weekly rejection, I think sells are going to look really good. And that's another good thing as well, when price is ranging, it allows you to, you know, review the chart and look at different time frames, start to plan ahead, you know, like how I've just done within this you know, this daily candle here. So it gives you some time to reflect on the charts based on a high time frame. Do we have any questions? Okay, so I think probably today we will be ending the live stream slightly early, maybe like 5 minutes early or so. But just to mention, the next live stream will be in a couple of days. So that would be on Tuesday, 11 p.m. UK time, so that's GMT. Yeah, so it'll be 11 p.m. GMT UK time, and we will be planning ahead for Wednesday and the rest of the week. So like, let's say Wednesday daily candle, we have the Thursday and the Friday as well. And yeah, you're welcome, Ziad, you're welcome anytime. You're welcome, Vince. You're welcome anytime. Thank you guys, I really appreciate you all, you know, tuning into the live stream and keeping it active. We're really looking to expand, you know, our community, because for me personally, you know, I like to keep consistency. For example, you know, from when I started doing the analysis, I have not missed a single day. Like, I haven't missed a single session without doing the analysis, regardless of what the situation, regardless whether I was ill, whether I wasn't feeling up to it, which I never felt like I'm not up to the analysis. I actually really enjoy doing the analysis. Thank you once more, Salim. You're welcome, Nimat. Always a pleasure to have you here. But yeah, like, regardless of this situation, I always, you know, keep doing these analyses. I've always did them because it builds, you know, that confidence. You know, you connect with the chart, you start to literally, it becomes easy to anticipate where price could go, and that's how you can, you know, get better at something. You know, and you never know. You know, it's it takes time. You go through different emotions. It allows you to understand the market more. You get to see so many NFPs. You get to see so many CPIs. You get to see so many, you know, interest rates, reviews, and whatever. You get to see different events. For example, I've been through the events of, like, you know, the pandemic in 2020, been through all the lockdowns to see how price reacted, especially the Brexit. We've been through, you know, the Russia-Ukraine conflict, which started in February. Now, it was really interesting to see how gold was just hammering, going bullish, and then to see that retracement, multiple occasions, you know, is very interesting. And then you start to, you know, pick up on certain patterns. You know, sometimes you notice, for example, there's one thing that really didn't make sense to me personally back in 2021. I remember in January, was it 2021, 2020, 2022, 2021, that should have been 2021, yeah. So back in January 2021, for example, GBPJPY, you expect to see, for example, the daily candle starts around the Asian session, pre-Asian session, okay? And you expect to see volume coming in. If the volume doesn't come during the Asian session, which obviously we have the Japanese yen open, but you have the pound sterling closed, you'd expect that volume to come in around the London session. Now, what didn't make sense is back in January, and I would say that lasted for about 3-4 months, from January to about April, and every single session for gold, for GJ, every time when it gets to the London session, there is no volume. And everyone's waiting, price ranging, forming rejections, and all the messy range, yeah? And it didn't make sense because obviously that's when, you know, the currency of the pound sterling's open. So you'd expect to see volume. But then the volume sometimes comes in after, let's say, at the New York session, or it comes at the NYSE. And if it doesn't come at NYSE, you can see it happening at the London close. Now, that really didn't make sense, and I'm still questioning that till this day, why price didn't move at a certain level, you know, like why didn't we see volume during the session where that currency is active? Now, one of the reasons obviously was that's when the Brexit approval was happening, and there was like obviously few, you know, businesses was coming out of London, and we started to really see that reducing volume. And again, obviously you've had the pandemic coming in, you've had many places shut down, low production, prices started to rise back then, and then yeah, it's interesting. So then I picked up on the pattern. So within the first 2 weeks of January, when I seen the London session just ranging, I was not paying attention to London session. Like I wasn't intentionally trying to trade the London session, simply because of how price was ranging. So I was thinking, okay, there you go, next day we're going to see a range in the London session. So it was so easy to predict. And you can even go back on the chart starting from January, the beginning of January 2021, and you can see how every single session during the London session up until maybe April or May, or even April, let's say, price was literally just ranging around the London session. And then you always see decent moves happening during the NY Open or NYSC, and if you don't see anything happening within these sessions, you'll see decent volume around the London close. And again, that really didn't make sense, because again, that's when the currency is closing, and it didn't make sense to see volume coming after that. So that's like a puzzle. But the least I could do is, back then, is I have identified myself that there was always going to be range, and it's something that to be wary of, the London session, I would say. And that's always happens like through my market cycles, like for a good 3-4 months you see certain patterns. For example, for a good, sometimes it happens with gold, for example, you see through one weekly candle, every Asian session decent volume, every Asian session decent volume, and then all of a sudden it just dies out. But yeah, do we have any questions before we wrap the live stream? Those were when your fundamentals will align with your technicals, Salim, because of all the events. Yeah, I mean, like that, the situation about GJ back then, it was really tricky, because what didn't really make sense is to see price ranging. For example, obviously GBPJPY during the London session, that's when the pound sterling's open for, obviously trading's active, and it didn't make sense to see price not moving during that session. So it wouldn't make sense to see, let's say for example, USD moving during the time when it's not operating, for example. But yeah, I just, it was just really strange to see that price ranging. Not sure if I can go back, maybe even on a 4-hour time frame. That's going to be really, I don't think it allow me to see all the way down to the 2021. Oh no, I'm looking at gold in here. I think probably it's easy to do it on TradingView. That's going to be lengthy. Let's have a quick scroll, just have a look. So 2022. Price was even lower. I think he was trading between 155 at the time. Let's see if my memory is correct. Almost there. January, almost close to it. Yeah, trading within 155. Let's see how accurate this is. Yeah. So let's go to January actually. Okay, so January. Look how volume was happening in the Asian session, but then you've had London Open. Look at that range. I mean, this 4-hour candle this was like when you break it down, probably I can't break it down to the low time frame, but if you break it down, you can identify a range within this level. Okay, now price range is really bad. So next one. But I think on TradingView is much easier to look at. But let's go back to our recent price action. Let's have a look. Okay, so the hedge funds and central banks were trading less liquidity, I guess. Really hard to answer that one, honestly. Something I don't know. I wouldn't say I'm major in fundamentals. I do look at them a lot. I would say Capital Hungry is really, like GV is really good with the fundamentals. I watched a lot of his documentaries that he used to put, especially about the pandemic back in 2020, and he spoke about a lot of things that lined up with the market, a lot of things. So a huge credit to G from Capital Hungry. Thank you very much, appreciate it. You're welcome anytime. But yeah, so I think we're coming to an end of today's live stream. I'd like to thank everyone for coming to the live stream today. Thank you for your participation. I really appreciate everyone's time and effort. I think I hope I gave enough information to everyone. I hope everyone have a good session, a good start of the week. So we will see you all on Tuesday. That will be 11 p.m. GMT time. Will be 5 p.m. Eastern time. We'll be posting a link on Instagram just in case if anyone's gonna be missing it. But thank you again, guys. You have a nice day and see you later. Thank you.